Snipers, you have to see what's happening in the Bitcoin price right now as our daily candle closed with a bearish continuation pattern. A couple of very significant things happening on the charts right now. And the first thing I want to talk about, this is going to be a very quick video because this is still an ongoing situation, but Bitcoin is approaching this extremely important support here where there's a lot of confluence in between the previous weekly open, the 2018 previous all-time high, and the monthly open. And for the bullish case, just to start off with, at this point, if Bitcoin is going to form a higher low, it's going to have to see some volume here very soon, or else there's a chance we could be breaking down. There's a lot of puzzle pieces indicating that there could be a potential breakdown. We have to address the bears on this channel, so I'm not going to downplay what we're currently seeing. This fractal is very oddly similar to the fractal that took place when Bitcoin was trending in the $30,000 range. We've talked about this before, but just to remind you guys what we're talking about here, Bitcoin was inside of a triangle formation that broke out, very similar to what's happening right now, before we saw a fake out and continued downside. You can see it's actually following this fractal almost to the T here. And so what we could assume is there's a potential we have a garden variety bounce here at a major support where we have all of this confluence, but so far things in the four-dimensional revolving parts just aren't looking good. And we'll start off with the DXY closing with a bearish candle on Friday, but then today we have this bullish continuation, bullish engulfing candle, indicating that there's further upside here for the DXY. The DXY is still in price discovery. This is a very bearish puzzle piece for Bitcoin, which is why I've had a red flag here over the last few weeks for the DXY, because we know in the macro it's been in a very strong uptrend. And so this right here tells us that Bitcoin certainly could potentially continue to see new yearly lows. It doesn't have to happen immediately, but another interesting puzzle piece right now is you can see we're breaking back down from this previous resistance, which was supposed to act as support. Our daily candle fully below that support level, which is now a resistance level right at the apex of this symmetrical triangle, indicating to me, especially if we look at the Bollinger Bands, that a move is coming here very soon, because we know when you start to test the resistance of a Bollinger Band and it starts to tighten up, that's when you start to see the volatility, just like what happened here at 30,000 US dollars. And so I'm not going to downplay the fact that things are just not looking good for the immediate short term with Bitcoin. Ethereum already breaching its major support level, failing to form a higher low, and you can see it's playing a very dangerous game here below 1165. That's a major support, fully below it right now. The only next major level with volume for Ethereum is 909 US dollars, and it looks like Ethereum could potentially come to test that range. We do have this monthly open right around 1070 that could potentially act as short-term support. But there are some very important things happening. I'm sure you guys have heard about the news with the euro, and this is a leading indicator that we've tracked here on the Snipers channel for a very long time. And now the euro is equivalent to $1. We haven't seen that in over 20 years, that 1 euro is equivalent to $1. Usually the euro is stronger than the dollar. And so this indicates that we're continuing to see a risk-off environment, because we know the Euro to USD chart has predicted the previous bull cycles for Bitcoin. When we've seen a reversal with the Euro to USD chart, it's inversely correlated with the DXY. Usually the DXY tops out and Bitcoin starts a new bull cycle and it starts to bottom itself out. But because we're continuing to see new lows here, that indicates that Bitcoin could also start selling off if we continue to see a risk-off environment, just like the Euro to USD chart consolidated here for a bit, but now we're starting to see it transition into lower levels. That could certainly be on the table for Bitcoin. So what are the downside targets if Bitcoin starts to break down, and what are the bulls going to need to prevent that from happening? Well, that's what we want to discuss today. Right now, 19,798, that's the 2018 previous all-time high. We're seeing a very garden variety market reaction to this level where we're not just seeing it cross below. This is a major support level. We know the monthly candle was able to hold above this level to close. It was in the last 7 minutes of the close, but the monthly candle from last month held above this level. And now you can see a very large wick with this new monthly candle, not necessarily what you want to see wicking into the 50-month moving average, and our new weekly candle fully below and detached away, free falling, skydiving away from the 200-week moving average. Certainly not what you want to see. It's a different picture with Bitcoin against the money supply. It has been below the 200-week moving average for the last 4 weeks. And so there's a lot of things to talk about today, but we cannot downplay the fact that Japan right now is down 1.88%. That's not a bearish, or I'm sorry, it's not a bullish puzzle piece. It's a very bearish puzzle piece in the immediate short term. And you can see the equity market's also reacting to the DXY's strength, down 0.61% for the S&P 500. And so the question is, what is on the table next? We know that Bitcoin against Tesla was our leading indicator of this potential sell-off yesterday, which is why I had a second video out at 1 a.m. as an emergency update, because we started to see this Bitcoin to Tesla chart sell off. And we were hoping that the Bitcoin CME gap that was formed yesterday, we don't form CME gaps often. Just notice the only CME gaps we have in the immediate short term is down at 18,440, which we've partially filled. And then the one up top here around 27,365. But now we formed another CME gap. I'll actually go ahead and mark it on the chart for you guys, because this is going to be a significant level here. The candle low, 21,160, is where we have this CME gap. And so we have not yet filled this CME gap. We're inside of this extremely tight range. Here's what the bulls need at this point, and then we'll talk about the potential downside targets if the bulls fail, because we have to follow the trend. And look at open interest right now. You can see that the majority of the market is bearish. If you're bullish in this market, you're going to be talked about, you're going to be ridiculed, because it's quite clear most people are following the bearish trend. Shorts with open interest are clearly taking over right now. And so there are a couple things that we'll discuss, like the Fed's pivot indicator. I'll talk about that in just a second. But for the bulls right now, we need to hold this range here. 19,315 is the max amount of downside that I would tolerate for a bullish case at this point. And so what I mean by that is, if we do start to see, let's say, a wick start to come down here to 19,315, we have to monitor the volume on the smaller time frames to start to see some institutional buy volume come on the table, because so far you can see we're just seeing large spikes of institutional sell pressure. Lots of news going around, like Celsius transferring all of their Bitcoin onto exchanges, potentially selling it off. MT Gox releasing Bitcoin, potentially going to sell off the market. A lot of these fundamentals we've seen, and we've heard these rumors in the past, in the 2018 cycle. And so you want to take everything with a grain of salt, but it's just not looking good. We cannot downplay what's happening right now in the markets. And so I think that what I'm monitoring personally right now is the Bitcoin against SPY chart for an abnormal move in Bitcoin to the downside. If we break this recent consolidation low and Bitcoin really starts to underperform the S&P 500, I think this is a very strong indicator that we have to look at that downside scenario for Bitcoin. And so I'll let Josh talk about what he has on the table. But if we were to see 19,315 break, the major support right now, the previous weekly open, in my opinion, we'll just have to stick to the fundamentals, and we'll look at this symmetrical triangle that Bitcoin is in and just follow the schematics here, taking the base of the triangle and looking at what the potential target could be. You can see we could potentially come as low as 13,970, but I would expect some form of support at 17,204. And this is only if we see a major breakdown and a transition into new lows for Bitcoin. And the first confirmation of that comes at 19,315. The bulls have to rescue that level. It's not just a major support for the symmetrical triangle, but it also acts as a major support for the parallel channel that Bitcoin is currently in, which we know is confirmed because the midpoint of this range has acted as support in the past, and it's acted as resistance. And so this is a confirmed pattern. We had our emergency video out yesterday, and we started to see the midpoint break. And that's why we started to talk about this $20,000 level coming back on the table, which Bitcoin is clearly testing right now. We have CPI numbers coming out on Wednesday. And so that's July 13th. If CPI numbers come out bad, let's say we see a 10% month over month increase in inflation, year over year, 10% increase, whatever it might be. If there's a double-digit number, the fact of the matter is we may even see the Feds have an emergency meeting to raise interest rates, because a double-digit number is extremely bad for the markets, and that could start bringing in conversations of hyperinflation and so forth. And so that would be the worst-case scenario for the CPI report. I'm seeing rumors on Twitter that the CPI numbers are actually going to come out pretty bad, but you have to take that all with a grain of salt. So that is a very big event coming up fundamentally. And so my hopes is, personally, not to give you a biased opinion, but my most unbiased opinion is that maybe we'll trend here above 19,350 until July 13th and we get that CPI report. If it comes out bad, then we have to start expecting a downside scenario. The two major support levels down below is 17,204 and 13,970. And Bitcoin will typically not range too far below these major volume levels. So that's why we'll keep these two on the chart, but I'm not expecting anything further down for a major downside scenario. But the positive is, if CPI month over month is down, then maybe we test 19,315 or we stay around this area, and then we could see a potential push back to the upside, and then we can take off this fractal off the table that Bitcoin is going to transition into another downwards movement. And so I think that's the main parts to monitor. I'll also mention this before I'll let Josh speak here in just a second. Let's monitor the Ethereum to Bitcoin chart. If we break 53,500 Satoshis, that's a very big concern for the Bitcoin US dollar price, because that could assume downside. And just notice how the Ethereum price already broke down from its market structure. And so we can even just take the target now of this. This was supposed to be a ascending triangle. You can see here the target now that we've broken the support of this.
It's an ascending triangle, yeah, which is typically seen as a bullish pattern, right? But that doesn't mean we can't have a great downside. Right?
Exactly. I mean, it's just during a bear market, you have to take all these patterns with a grain of salt and just realize that the trend is your friend until it's not. And I think that's very clearly shown here with open interest clearly on the short side. So that would bring Ethereum to $780 for a fulfillment of this breakdown. And so I think if Bitcoin does see that $17,000 or $13,000 test, that the Ethereum price is vulnerable down all the way to $780. I might even have to go onto my charts and map out further support levels, just because obviously we were hoping that the 2018 previous all-time highs wouldn't breach, but now we're obviously seeing abnormal activity, and that's clearly shown with what's happening to the DXY breaking new 20-year highs. I saw it on Twitter today. 2022 is certainly going to be a year to mark in the history books, because we've never seen the DXY this strong, and now €1 is equivalent to $1, right? So let's see what happens there. Maybe we got to start talking about that great reset. I see we have John, Chris, Skoda, Osama on our live stream. Thank you guys for tuning in. Ask your questions. This is going to be a quick one. I want Josh to share his thoughts, and you can go ahead and even share your screen. I believe that's all I wanted to go over. And there's a couple things I'll talk about here with this potential Fed pivot indicator, Josh, but I'll switch over to your screen here, and we'll talk about what you have on your charts, because you took a short position at $22,000, right? So
you heard it here. You heard it here on the channel.
Let's see what you've got going on, man.
All right. Let's look at some cool stuff. But first, I need everybody viewing this live stream to give me the number one if you want to see some high quality crypto content.
Post number one in the chat. John said number one. He was the first one to put it.
Fun of all this is we can interact. We're live. You know? We can talk in the chat. But no, what I'm looking at right here on the 7-minute chart, which once again, you know, the 7-minute chart basically provides me more information than, say, for instance, the 5-minute chart, etc. So I've always just liked it a lot. But the cool thing is that we have the volume weighted average price, which is this white line moving average. It's one of the most important moving averages for day trading. And so typically when we get which by the way, this was the previous volume weighted average price at 20,423. So typically when we get a bounce of support off of the volume weighted average price, that can be seen as bullish activity. But we are testing the monthly daily open right here. And as long as we're able to stay below the monthly daily open, then it would become very bearish. If we can come up and test this as support, not just the volume weighted average price, but if we can test the monthly and daily open as support, then we could potentially see some further upside activity. One thing that's kind of keeping us afloat is this right here, 19,679. This is a great area of confluence because these are the levels on the Snipers YouTube channel that we look for, especially on higher time frames like the weekly. We look for those areas of confluence, right? And so what we have right here is, like I said, 19,673. But you can see this is on the Bitstamp chart. So every chart may be slightly different. However, we are now in this new pattern that also Naeem has talked about. This is on the weekly, by the way. And we are on, or in, I should say, not on, a new pattern right here on the Bitcoin US dollar chart. And so if we do see a breakdown of this very critical line right here, then potentially we could fall all the way down to this line down here at 19,325. And then this line right here as well, which let me just check. Give me 1 second. All right. So let me just pull this up too, because I think I had some people asking something in the chat. There we go. Okay. So what I'm saying is, guys, is that if we breach this very critical line, just as Naeem said as well, you know, we could potentially see, you know, 18.5 and even 17.5. But luckily we have this yellow line right here, the one that's not a dashed line. You can see this yellow line, and it's always served as a bottom. And so other than March 2020, where there was about, for instance, there was about, 7 weeks or so that we spent below it. But what's interesting is that we have that on our side. So even if this does break down, which by the way, if it does, don't be surprised if I take a short, even though I'm a Bitcoin bull. It's called hedging, right? It's the concept of a hedge fund, portfolio diversification. But basically what it's going to do is most likely going to retest this area. And if we do break below this yellow line, which would be somewhere around the, below 17.5, we're definitely going to see some further downside. And that would be kind of similar to a catastrophic event, which March 2020 basically was. So, if we zoom in here on the 8-hour, I'll kind of show you guys what I'm looking at. So I think this could be, if we don't have a breakdown, I think this could be an easy, daily, monthly open to weekly open play. Meaning that, we would enter somewhere around here in the bullish scenario. We would ride it up and, hell, even sell, 50, 75% and see if it goes even higher. So this pattern plays out. But essentially, though, at the same time, these are the things that we got to be conscious of. And so right here would be a good entry. If we don't, then we could be seeing some further downside as well. As Naeem mentioned, I mean, it could really get ugly. Yeah. So this is a very critical emergency update. It's very important that we get this information out to you guys fast, because this is what we call right here an inflection point. And with trading, it is only at inflection points that we are rewarded. So I'll turn it back over to you, Maggie.
Here's what I'd like about you saying. We could entertain a long position, and the only way that that would make sense is to see some sort of a confirmation. And right now, I think my biggest concern is the DXY is continuing to aggressively break out, which means that the strength of the US dollar is showing us right now that markets potentially have not found their bottom, and that the CPI report coming out now, we have to assume that there are some insiders that have an idea of what this CPI report's going to look like. And the fact that the DXY is pushing up before the CPI numbers are coming out, they have this saying, buy the hype, sell the news. Hopefully that happens with the DXY, right? We're seeing a buy the hype and then it sells the news because DXY sells off after CPI report. But that hasn't happened over the last 7 months. We've just continued to see CPI reports come out and equities continue to sell off. So, I like what you said about that scenario. If we're going to take a long position, there's a potential opportunity here where we form this third higher low. I think a third knock on a door is never a bad idea, right? You take the long position.
That's what you said. There's a CME gap, right, at 21 or something like that?
Which is exactly why I loved what you mentioned about the weekly open. And right around that CME gap, we wick into the CME gap, whatever it might be, and then we see that push to the downside. And that would actually be exactly how this fractal played out, because it didn't just immediately dump after failing with that symmetrical triangle. We pushed back up for a little bit, and then we saw it play out to the downside. So that's a highly likely scenario, but we have to see some four-dimensional revolving parts, in my opinion at least, play to this favor. And I'll mention this right now. Bitcoin is definitely not following the S&P 500, because notice that S&P 500 has not come down to its monthly open yet, right? But it is following Japan really closely, because Japan is doing the exact thing that the Bitcoin price is doing right now. It's slightly below its monthly open as we record this video. And so I'm looking at Japan right now as one of the important leading indicators in the immediate short-term time frame, because it looks like Bitcoin's following it. But because the S&P 500 is still quite high above its monthly open, there's that potential we do follow the fractal from 30,000, come up, fill the CME gap before continued sell-off. But we're clearly seeing a failure of the breakout here, so I think that that's something to note. We're clearly seeing the DXY continue to show strength. We're clearly seeing a continued risk-off environment with the Euro to USD pairing. And by the way, I see we have Izangi, Skodo, Tim, Billy, Tommy of a break of this major support. But if we look at Ethereum, it's already telling us that Bitcoin's going to break that channel support. It's already breaking down from that channel support. So, if Bitcoin breaks this channel support, it's just going to follow what Ethereum has done. Could we potentially see a break here, a fake out, a test, and we reclaim that by the time CPI numbers come out? Let's say CPI actually comes out good, month-over-month decrease in inflation. We could definitely see that pump to 24,000. I think that's what we're hoping for, but this is what you want to keep in mind before you leave this live stream. The markets are at an inflection point right now. They have continued to reject the 200-period moving average, and you can even pull up exponential moving averages, but I'd like to look at this 4-hour 200-period moving average. You can see Bitcoin rejecting it so far, just like the S&P 500, rejecting this extremely important moving average so far. And so the markets clearly are not confirming a breakout. And I think that's because of the fact that CPI numbers come out on July 13th. So I think that's going to be a major inflection point. So maybe a long position here soon is a smart idea. The last long position that I took, if you guys were tuned into our video or on our Discord, we sent out our signal right under 19,000, around 18,700. We took our long position. I know Josh took a short here at 22,000 because you saw that immediate reaction and you're still in that short position. And so that's good for you. And I know you were telling me that you were potentially taking profits here soon to move into a long position. I really like that, because what do margin traders do? We trade the marginal movements of the market, right? So these are all marginal movements, and there's no justification just yet to say we have to break out of this consolidation, right? We could even just draw, let's say, this resistance and this support here as our consolidation range. There's no reason for us to break out of this right now. But that's why I'm watching the Bitcoin against SPY chart, because that would give us a reason to break out of this consolidation range if we break down from this major support. And here's one piece of bad news. Sorry to be the bearer of bad news here, but Bitcoin against Tesla chart already just recently today on the daily candle broke its consolidation range. So this is starting to put the more bearish bias on the table, which is why I'm not downplaying the fact that as much as I am a macro bull on Bitcoin, it's clear on the logarithmic chart, it's a bullish asset, we have to be honest and unbiased as much as possible, as we always are here on the Snipers channel. So I think these are very interesting puzzle pieces. One thing, if we look at altcoins right now, you can see a lot of them are green for the most part. So does that mean that, maybe this move isn't going to come here soon? Maybe this is the time to long the $19,900 level, right under a big psychological number of 20,000. S&P 500 hasn't tested the monthly open yet. Maybe this is just a front run before we come to fill the CME gap up at 21,000. Who knows? I think all those things are on the table, but what's clear is there's indecision right now. And I think the worst part about this right now is if you look at this and you just take an unbiased approach, right? You take a beginner and technical analysis and you say, what do you see on this chart? Well, this is what I see on this chart. I see Bitcoin broke below a major support, the 200-week moving average, and it came to test it, right? Exactly, and it rejected it with our last weekly candle.
Yeah. Look at that wick too. Look at that rejection. That was the destination for sure.
Exactly. You reach a final destination. What happens? You immediately turn back around. So as a beginner trader, I'd look at this and say, "Oh, that's a clear rejection. It was smart to take a short at the 200-week, and now we're going to see continued downside." Is that what's going to happen? Very similar to how Meta failed at its 200-week moving average, right? Coming up, testing it. If you took a short here, it would have been a great short position because we never saw that level ever again. And now we've trended down to no man's land. And so it's, it's just this.
No man's land. I love that term.
Yeah. I mean,
it's like you're like out in the middle, like you're deserted out in the desert. You're in the middle of no man's land. It's like you don't know what's going to happen.
Yeah, it's like all on-chain indicators are saying that we're at a bottom or close to a bottom, but it's like, okay, but we don't know where the bottom is, and there's 50% potential downside here just to 10,000, and it's like, okay, well, what do we do? Well, I heard a great trader say this the other day. I think right now the best thing to do in the market is buy in for your spot positions long-term, but don't go over 50% of your allocation because we don't see fundamentals getting better, and things are staying the same or not getting better, then we have to assume the trend is going to continue. And so that actually is a great pivot to when are things going to get better? Well, here's a Fed pivot indicator, right? Here's an assumption, a thesis that's out on the table. Kathy Wood strongly believes this thesis, and this chart is going to explain the thesis even further. And that's the fact that maybe markets will only bottom out when the Fed starts saying, okay, we're done raising interest rates. This is getting a little bit too far, and markets are reacting negatively, and we want to actually start easing away from the interest rate hikes. Well, here's the Fed pivot indicator, right? The average of the 5-year yield and the Fed funds rate multiplied by the national debt. And this has marked when the hiking cycles have ended. And you can see we're approaching that point where at some point or another, the Feds might need to come out and say, hey, we're done raising interest rates. We cannot do it anymore. You're looking at what's happening in the euro against the USD. People are saying that things are going to collapse. Something's going to collapse because what we're seeing right now, we haven't seen in 20 plus years. And so if something's going to break, something's going to start breaking here very soon with what we're seeing with the strength of the US dollar. So as much as inflation is a big problem for the Feds, the US dollar strengthening too much could also be a very big problem. So I just want to put out this Fed pivot indicator. It's not exact. In the past, we've trended here for a while, but what we certainly don't want to see is a major breakout here. So, if you look here, you can pull up this chart on TradingView. You take the Fed funds rate, the average 5-year yield, multiply that by the national debt. You can pull this up. I'm actually going to keep this here and pull it up on my chart and keep that as a 4-dimensional revolving part here in the future. But thank you so much, Josh, for your thoughts here. You missed the bottom. It says still making higher highs and lows since 17.6K. Yeah, I like that. That's why we're always addressing the bullish case here. But there's certainly been a lot of pressure for Bitcoin to move further up. We weren't able to get to 24,000 US dollars. That to me is an extremely bad sign. Learn Crypto TV says, thanks for chiming in and saying what no man land is. Good job, Josh. With bad sound also. Is it a good idea to long 780 US dollars on Ethereum? Kurta says, here's my rule, and we follow this on the Discord. For the first test, I love to take my position because you're taking the most risk as a trader, so you have the most reward. So yeah, especially if this is the first test of 780, if we get a test of 780, that first test, what you do is you go on the smaller time frames, you confirm that we're seeing more buyers than sellers as we test that range. So that's what your confirmation is on the smaller time frames, 5 minute, 3 minute, 1 minute, so you don't lose the entry. Because a lot of times when you reach a destination like this, you immediately turn back around. So you want to get that confirmation as quick as possible on a 5 minute, 1 minute chart. If you see a reaction there, I think it's a great time to enter long, because what would most likely happen is you test this level, first test, you get the reaction, at least up to 909 for Ethereum. So that's how that would work out.
I got to just interject here real quickly. I didn't even look at that. I just looked at the Ethereum chart. Look at that, man. I'm about to open up a short on Ethereum right now because we broke that mark.
I know
I'm
somebody.
I'm just kidding, guys. I'm not going to open up like right this second. But what I'm saying is, you know, if I was on a live stream right now, it just kind of depends. But it definitely looks like it's going bearish, doesn't it?
Japan is selling off as we speak.
You make me want to go short Ethereum right now.
Yeah, man. I mean, it's breaking down from market structure. That's not
Bitcoin
good.
hasn't went past the line yet, critical line yet. But maybe Ethereum might, as weird as it may sound, might be a leading indicator and show us what potentially, you know, might happen with Bitcoin, even though most people think it's contrary.
Oh man, it's always been a leading indicator. So, you know, I don't like the fact that Bitcoin's sitting here below the monthly open, below, already testing below the 2018 previous all-time high. So, you know, we'll leave you guys with this, snipers. I would assume that it is a little bit dangerous to enter into a long position here at this exact point. I think that until CPI numbers come out, we're going to have to wait, and from there we can get a more confident idea of what the overall direction is going to be into the next few weeks. And with that being said, I think I'm good for this video. Josh, do you have anything else to share?
Yeah, I do want to share one other thing, because I don't want anyone to just rush out and go short Ethereum just because I said to go do it. We have to be responsible. But let me just give you my thoughts. If I were to short Ethereum, and it's going to be, you know, I'm going to try to keep it simple. So as Naeem has once again brilliantly identified opportunity, that's why you always need to tune into the Snipers YouTube channel, so you can be ahead of the biggest moves on the board. But what I was going to say is, yeah, I mean, this would be a potential short opportunity, because look, it's broken its support. What typically happens once support is broken? Well, we see further downside, which we've already, you know, had confirmation of. And this is on an 8-hour time frame. So, you know, this is above the institutional time frame, which is the 6-hour. And it just gives me more information. That's really the only reason why I like to use it. But essentially the whole thing is, if I were to take a short here, I would make sure that we go past the monthly open, because what we may see here is we may see a potential bounce here at the monthly open on Ethereum. And if that were to happen, the last thing you want to do is be in a short. And so I wanted just that to be on the table, because I know there's a lot of you guys are traders, and a lot of people don't have this daily, yearly, monthly, weekly open indicator on their chart, which is free on TradingView. And so they're not seeing the same levels, you know. If I were to take this off, you know, it's literally like I'm flying blind. I'm just like, oh, okay, it broke it. Okay, or, you know, short, and then get wrecked, right? Potentially. So that's all I wanted to cover. Let's see, where was it? Oh yeah, the moon phase. That's another thing, right? There it is. So the moon phases. I wonder what the moon phases says for Ethereum. Oh no. Wait, let's go to the daily. Oh no. A lot of the big move is already played out, but you know, this is another leading indicator. Let's go see let's go see what the moon phases are on Bitcoin real quick on the daily. Yeah, so it's saying go short. So we'll see, but that's really interesting. So thanks for sharing that.
Man, talk about four-dimensional revolving parts. I think, Josh, when you and I are on the live stream, we need to start talking about five-dimensional revolving parts because we really crush it with every angle. And I think the viewers agree with that. Skoda says this is top quality crypto YouTubing. Well, thank you all for tuning in to our channel. Smash the like button before you guys leave. This is a quick update because I don't expect Bitcoin to make a move while you're watching this video, but the main topic right now is the fact that we're testing an extremely important area and that there's a very strong potential we could be wicking down, we could be clearing out positions down here. It's just a dangerous place, potentially a long opportunity on the table here, but we're gonna have to see some of the environment outside of Bitcoin turn to the favor of Bitcoin because, you know, we were counting on this DXY bearish candle playing out on the daily, but you know, we've seen it time and time again when you're in a very strong macro uptrend. It's like when Bitcoin was shooting up from 20,000 to 64,000. Even if we saw one bearish daily candle, it didn't matter. It continued up because that's called price discovery, you know. And so as much as we had this bearish candle here, it didn't matter, you know, just like it didn't matter here. And this right here, what we saw, I call a bullish continuation pattern. We smashed through this major resistance at 106.56. You know, the real big resistance coming up is 121. So there's a lot of ways to go here for the dollar. Let's see what happens because the dollar strengthening too much could also be a problem for the Feds as much as they want to fight inflation. Let's see what happens. But for the long position on Bitcoin right now, right below psychological number 20,000, potentially to just form its third test of the higher low, potentially a good idea. Who knows? But thank you guys for tuning into the Snipers channel today. Josh and I will have another live stream out later tonight if something important happens. I might even have another video out. Who knows? But we just wanted to come on and ensure we were there by your side during the hardest times. We want to be live more than anything to answer your questions because we know it's extremely important. Thank you guys so much. Skoda says 5 dimensions might be too much. Japlet says you guys are awesome. Callie says love the content. Remember, subscribe to Josh's YouTube channel. Link is in the description below. Let's get him to 1,000 subscribers. Smash the like button. And until next time, snipers, we're going to be out of here. Any final words, Josh?
No, that's it. Just be careful and don't use too high a leverage. And make sure you tune into the YouTube channel, or I should say the Snipers YouTube channel, because this is where we teach you how to become a true sniper.
Bam. Well, until next time, from the youtube.com/snipers channel, we'll see you guys tomorrow. Snipers out.